right, aging in place, financing homes for multi-generational living, helping families stay together while building wealth. We're going to talk about what this is for really planning for aging parents, some adult children, some for themselves. So we want to talk about this and really kind of go through this. Just a little bit about myself. Been doing this for 24 years now. Areas of focus: reverse mortgage, HELOC and construction financing, renovation, ADU financing, jumbo, VA, conventional loans. What we're going to go over today is really the trend. Why multi-generational housing is growing. What aging in place really means. The options through ADUs, reverse mortgages, every financing path available. The planning, estate planning considerations, family considerations, long-term family wealth. Why families are living together again. What's driving rising home prices across California, longer life expectancy, the cost of professional caregiving, childcare costs for young families, student debt, delaying independence, generational housing affordability pressure, and a genuine culture shift back to multi-generational housing. So, what does aging in place mean? It means safely in your own home instead of moving into assisted or skilled nursing. So, why families choose this: emotional comfort, staying in a familiar home, financial savings relative to many care facilities, health benefits linked to independence and routine, and staying close to family and community. Multi-generational living is growing. Who's involved? Grandparents, parents, adult children, grandchildren, caregiving. It's really two generations under one roof anymore. It's really three or four. Financial benefits: what families gain: lower overall housing costs, shared utilities, shared caregiving responsibilities, reduced transportation costs, preserving family wealth across generations, and building equity together. Emotional benefits: families gain. It's important to look at. Daily family support, time with grandchildren, huge. I have three daughters, two toddlers and a newborn while I'm recording this, and spending time with grandma's everything in my household. So it's a big one, right? Increased safety for aging parents, companionship, reduced isolation, improved overall quality of life. Housing options. Your family's housing plan. One is traditional shared home, everyone under one existing roof. Another is an attached suite, private space built onto the home. Or there's a home addition, expanded shared living space. There's an ADU garage conversion, which is a separate independent unit, duplex or multifamily. Fully separate structures close by. So, is your current home the right home? Want to evaluate accessibility, location relative, that's relative to family and services, number and placement of bathrooms, number and placement of bedrooms, stairs and level changes, access to transportation, important, proximity to healthcare, walkability of the neighborhood. Home renovations for aging place: walk-in showers, grab bars, wider hallways, ramps, smart lighting, lever-style handles, and main floor bedroom, universal design principles throughout. So, building idea. Potential benefits here would be privacy for both generations, independence with close proximity, rental flexibility if plans change later, future income potential, increased overall property value. If ADUs are the primary interest for this group, we have a dedicated class unpacking ADUs fully, so check that out. Garage conversions. Why families use this: generally lower costs than ground up construction, faster construction timeline, creates generally separate living space, opens future rental opportunity as well. Home additions: primary suite addition, decade in-law suite, second story addition, accessibility focused design throughout. I see overview. So there's a couple ways. Equity based would be a HELOC, home equity loan, cash refinance. Purpose built is usually like a construction, renovation, or reverse mortgages. Home equity lines of credit is a revolving line of credit secured by your home. Potential advantages here would be draw what you need when you need it, right? So we have a client right now even that wanted to make renovations to property, build an ADO, plenty of equity. Their first mortgage has a rate of like 2.75. Using a home equity line of credit to do that was great. So it allowed them to do this, and they're doing it for phase project. Risk would be variable interest rate, payment could increase over time. Home equity loan, similar to the HELOC, but it's a loan, right? So fixed rate, fixed payment, predictable amortization. So a little bit different than a variable rate. Draw funds needed, which is more flexible with the HELOC. So cash out refinance, when it makes sense, current rate is at or above today's market rate. Single simple payment is priority. When it doesn't, current mortgage rate is meaningfully below today's rate. Only a modest amount of cash is needed. Renovation financing, common uses would be accessibility improvements, larger whole remodels, medical related modifications. Construction would be major additions, ADU, or fully detached units. Reverse mortgages, convert equity into accessible funds without required monthly payment. Available for eligible homeowners, generally 62 or older. Loan balance grows as interest accrues. Common miss. The bank owns your home. It doesn't. You retain title. Your heirs inherit the debt. No, it's not true. Many programs are non-recourse, subject to program terms. It's a last resort. For many retirees, it's a legitimate playing tool. So this is an education play, not a sales pitch. Reverse mortgage is right for some families and wrong for others. Protecting a low mortgage rate. One refinance isn't always the answer. A cash refinance replaces your entire first mortgage at today's rate. A HELOC or home equity loan can fund the project while leaving your first mortgage untouched and in place. Keeping a favorable existing rate often outweighs the convenience of one simple payment. So the goal isn't just financing the product, it's financing it the way that costs the least over time. Family conversations, topics worth playing early. Long-term goals for the household, expectation for daily responsibilities, financial transparency between generations, relevant legal documents and agreements. The hardest part of multi-generational housing is really financing. It's the conversation. Estate planning. Coordinate with the right professionals. Who's involved? Estate planning attorney, CPA, financial advisor. What to discuss? Trust, power of attorney, healthcare directives, beneficiary planning. Tax considerations. Topics discussed with the CPA, capital improvements, property tax implications, gift-related considerations, rental income if applicable. So general overview only. Always advise consulting a qualified tax professional for specific guidance. Insurance. So always worth looking at the coverage, the umbrella liability coverage, long-term care insurance, general liability, flood insurance or flood coverage if it's needed in your area. So caregiving costs, here's just an illustration comparison. Actual costs do definitely vary by reaching care level, but the lowest is family caregiving, of course. Then you have home care, assisted living, and skilled nursing. So this is an illustration, but look at this. It's quite a bit higher for skilled nursing versus family caregiving. So the overall cost is quite a bit less. It's benefit there, right? So the cost comparison. Saying modifying, remodeling costs, building ADU, sharing ongoing expenses, moving, selling costs, moving costs, new home, care. You have assisted or skilled nursing costs, ongoing monthly fees. So real family examples. Parents moved into an ADU, built a detached ADU for aging parents, use a home equity line of credit to preserve family's low first mortgage rate. Parents maintain independence while staying close. Another one was adult children moved home. A young family moved back because they want to save for their first home. They shared expenses. They even had a baby in there. And then eventually they had clear expectations from day one, but they ended up buying. So we had the accessibility remodel up in Santa Rosa where we renovated the primary suite for a main floor accessible layout. Used a home equity loan. Actually, it's wrong. It was a home equity line of credit, pardon. And allowed a parent to avoid moving to assisted living. And it worked out really well. We're still happy. So common mistakes are waiting too long to start planning, skipping the family conversation, choosing the wrong financing for the project, ignoring legal and estate planning, not budgeting realistically, and skipping the contingency reserve. So frequently asked questions. Can parents qualify for financing? Often, yes, depending on income, credit, and specific loan program. It's worth a conversation. Can we build ADU? Often, yes, but it's subject to local zoning and lot requirements. So we have a whole ADU class. Definitely check it out. Should we refinance? Depends entirely on your current rate and what your blended rate would be, meaning the first rate and the second rate. If it makes sense to do so and cash flow works, great. But often, if you have large amounts in that first mortgage than we'd have on the HELOC, I would say keep the first and maybe just do a line of credit. Can children help? In many scenarios, yes. Co-borrowing and gift funds are common in both strategies. Can rental income help? Yes. In many cases, but subject to the appraisal support and loan program guidelines. So we do a mortgage coach analysis. I'm not going to put it up on the screen for this call, but it is something that we do, create a presentation for clients once they apply to go for it in great detail. So why families use our team? Deep experience across every financing tool covered today. Thoughtful, unhurried planning conversations, clear patient communication. We do the analysis that I mentioned, and genuine education, not pressure. Working with professionals. We coordinate with realtor, contractors, financial advisors, estate planning attorneys, CPAs, builders, senior care professionals. No single professional should ever try to answer every part of this decision. Community resources. This is worth researching locally. Area agencies on aging, veteran benefits programs, home modification assistance programs, local nonprofit organizations. So you want to research what's available. in your specific city and county. So your family planning checklist. Evaluate your current home, discuss goals, meet with the right professionals, review your available equity, review your financing options, and create a realistic timeline. Next steps would be a consultation, review your home equity, build a customized plan, meet with your family. Additional resources, recommended books. We have quite a few. If you like, let me know. Love to share this with you. Government resources for caregivers, caregiver support organizations, mortgage planning guides, and home modification checklists. We have those available, so shoot me a message if you like those. Any questions, of course, let me know. There's my contact information. You can schedule a call with me by clicking the link below, or simply give me a call, shoot me a text or an email.